Richemont's lightening its portfolio. It's found a buyer for Yuke's NetaPorter and will sell that ailing online fashion and accessories business with a cash position of 555 million euros to My Theresa. In exchange, Richemont will take a 33% stake in the German luxury fashion platform. The deal is expected to close in the first half of next year. Datatec's forecast higher half-year profit. The ICT group, which operates in more than 50 countries, expects its headline earnings per share to register a jump of up to 74%. That forecast follows an improved performance by all divisions during the period. Datatec says Westcon continued its profit growth trajectory and Logicalis International strongly increased profitability. The group is set to open its books later this month. Sirius says it's on track to deliver on its full-year guidance. The group, which owns and operates branded business and industrial parks in the UK and Germany, has seen a 5.5% increase in rent roll for its half-year. It's pointed to organic growth across both territories and says Germany marginally outperformed the UK, with rent roll growth benefiting from stronger rates. KGRO M3 has also seen an improvement on its end. The diversified property developer has flagged an increase in interim profit, saying its headline earnings for the period should increase by 23 to 33%. KGRO has not elaborated on what's supporting that increase, but more detail should be provided when it presents those results next week. Jubilee is expanding its reach in Zambia. The diversified metals producer has acquired an open-pit copper mining operation known as Project G after agreeing to up its stake in that by 14% to 65%. This marks the second operation of this nature acquired in Zambia after the implementation of Project Munkoyo. CEO Leon Kutsa says these assets will help Jubilee achieve the copper target it's set for itself, which is 25,000 tons per annum. But Jubilee is not done just yet. Kutsa says Zambia holds numerous similar near-surface resource opportunities, which it is actively pursuing. In international news, BP CEO Murray Auchincloss has scaled back the firm's energy transition strategy to regain investor confidence by abandoning the target to cut oil and gas output by 2030. Here's more detail in this package report.
BP has abandoned a target to cut oil and gas output by 2030. CEO Murray Auchincloss is scaling back the firm's energy transition strategy to regain confidence from investors. 4 years ago, BP pledged to cut output by 40% by 2030 while rapidly growing renewables. It was the sector's most ambitious energy transition plan. But the firm scaled back the target in February last year to a 25% reduction as investors focused on near-term returns rather than the energy transition. The sources said BP now aims to do several new investments in the Middle East and the Gulf of Mexico to boost its oil and gas output. Auchincloss took over in January but has struggled to stop the fall in BP's share price. The energy giant has underperformed its rivals so far this year as investors have questioned its ability to generate profits under its current strategy. Auchincloss has tried to distance himself from the approach of previous boss Bernard Looney. He's vowed to focus on returns and investing in the most profitable businesses, primarily oil and gas, though the company continues to target net zero emissions by 2050. The sources added Auchincloss will present his updated strategy at an investor day in February. Rival Shell has also scaled back its energy transition strategy since Wael Sawan took over as CEO in January. The shift at both companies has come with a renewed focus on European energy security. It follows the price shock sparked by Russia's invasion of Ukraine in early 2022.
And the US is less than a month away from its most anticipated election. In the run-up, Republican hopeful Donald Trump is ratcheting up his protectionist trade rhetoric with a promise to up tariffs on vehicles imported from Mexico. Let's take a look.
Donald Trump says he could put massive new tariffs on vehicles imported from Mexico if he wins November's presidential election.
We'll put a tariff of 200% on if we have to.
That comment came at a rally in Juneau, Wisconsin, and it marked an escalation in the Republican candidate's protectionist rhetoric.
They're building some of the biggest auto plants, car manufacturing plants anywhere in the world, and then they think they're going to build them cheap and sell them into our country and destroy Michigan.
Trump had previously talked about a 100% duty on cars and trucks made in Mexico, with a view to helping the U.S. auto industry. Last year, Mexico exported about 3 million vehicles to the U.S. About half of that number was accounted for by the Detroit 3 automakers. But other foreign firms also have plants there, like this one run by Germany's BMW. Trump previously threatened tariffs on Mexican car exports both as president and as a candidate back in 2016. The move was opposed by automakers who said it would have a severe impact on the industry and lead to higher prices for consumers. Trump and Democratic rival Kamala Harris have been campaigning hard in Wisconsin, as well as Michigan and Pennsylvania, which are all seen as key battleground states.